Hey, it's Larry with your housing market update for the 13th of September. A lot going on. We'll get right into it. What's going on with prices, rates, and inventory? So prices are going up. I'll get into that in a minute. Inventory's flat. No real change there. Don't expect it to change either. And then finally, rates. Hey, some good news fun with rates. They're starting to come down. Not as much as we want, but they are starting to come down. So let's get into what's causing all of this. First, CoreLogic home price index report came out this week, and that showed that home prices are still going up. Not super high, but still it's better than the opposite, which is really low. So no housing crash in this neighborhood or any neighborhood. We had an inflation report come out. Actually, two, the consumer price index and the producer price index report came out. And both of them weren't as good as we wanted, but they were pretty much right where we expected. So we have that. And then initial jobless claims. One of the biggest things that's going to impact whether the Fed brings down the Fed funds rate or not is unemployment going up, and we're just not seeing those numbers. We'll get into that as well. All right, so let's first look at the CoreLogic home price index that came out this week. And we saw a jump the last couple months. May and June, we were at 1.6% year-over-year appreciation. This month jumped up to 2.5%, which is great. This is across the country. It's not specific to any one area, but this is now 6 straight months we've had of home price increases. So some good news there. You know, anybody who thinks there's going to be a housing crash, take a look at this, because despite being at 7% for much of the last year for interest rates, home prices are steady and they're going up. We are now at a point where we are surpassing our highs from last year, so that's some good news. And by October, all states are expected to be in the positive year-over-year appreciation. So some solid news for people who are thinking of buying, for people who bought homes and are now worried, oh, am I going to lose my shorts or my shirt or whatever that saying is? You should be fine. All right, you should be fine. So let's look at the consumer price index. All right, the consumer price index came out this week, and numbers were in line, a little warmer than expected, and they were a little warmer because of, well, the big thing is fuel prices have gone up. I think today the oil prices were at just above $90 a barrel, but the core inflation, which is the red graph, actually it's continuing to go down. Not as much as we want, but you know what? In light of everything else that's going on, the fact that core inflation is going down a little more every month. And last year, in June, overall inflation was over 9%, and now we're squarely in the threes at 3.7% overall. So we've come a long way in a year. And the problem with the regular inflation rate is really, it's going to be fuel. As long as fuel prices remain elevated, inflation will remain elevated. But the core, which strips out the fuel and the energy, or food and energy, that continues to go down, and that's good. Steady Eddie wins the race. Now, the producer price index came in. Those numbers were hotter. They were hotter than expected, but largely due to the increase in fuel prices. So we'll get into the next one. All right, the next thing to look at is initial jobless claims. Those came out on Thursday, and still no noticeable change. We need to see over 300,000 people applying a week. And we're still in the 200s, low 200s. This last week, 220,000, which is 3,000 more than last week. And then the continuing claims are still under 1.7 million. We had a 4,000 increase, but still under 1.7 million. We're going to need to see those numbers go up before the Fed really begins to think of loosening their numbers or raising the Fed funds rate. So we won't see that. But the good thing is they're starting to talk about that right now for 2024. They haven't been talking about that in 2024. The talk previous was, probably start lowering the Fed funds rate in 2025. So big question now is, are they going to raise the Fed funds rate next week? I would say there's a better chance that they will not. And they'll kind of look and see what the data tells them for the November meeting. So we'll see what happens there. All right. So let's go look at VA rates. Let's look at interest rates now. I told you interest rates came down. Not a lot, but we were at 7% a couple weeks ago. Now we're squarely into the mid to high 6s. And if we continue to get good news on the inflation front and some better news on jobs front, we should see interest rates come down. But there's about a 3 percentage delta between the 30-year mortgage rates and then 10-year Treasury. 10-year Treasury is still at 4.25, so really not going to see rates come down appreciably until you see that 10-year come down, and that's not going to go down for quite some time just because of the inflation. It's not moving fast, and also jobs are not going away. Jobs are still plentiful. Remember, over 8 million, almost 9 million job openings, less than 1.7 million people who are claiming unemployment insurance. So that's kind of what that's what the Fed is looking at. All right, now what does this mean for you? All right, well, rates are going to remain elevated. I've already told you that, but we did have an increase in mortgage apps this week. So that is some good news for buyers. That just might mean there's a little more competition. Sellers, that means, hey, if you put the house on the market, there's a better chance you're going to sell it. Seller credits, well, I'm seeing them right now. They may be short-lived. So if you're thinking about buying, let's not think, let's do. And then for sellers, you're still seeing some cancellations. Inventory's still low, and it's still a strong seller's market. So if you need to sell, it's not a bad thing. You should do well. And that's really all I have for you this week. I hope you enjoy your weekend. And as always, if you have any questions, please don't hesitate to reach out. All right, aloha.